Hello everyone. I did not make a video this weekend because I figured we'll just go ahead and hit everything up on Monday. Had a feeling things would not change, and it did not. The Nasdaq was down 1.16% again today. Once again, volume well above average, about as clear as you can be that we are still not healthy yet. New York Stock Exchange S&P 500 continued its sell-off today, over 1% on volume higher than the day before. And the Dow Jones Industrial Average also got a licking. And what's so funny about this is that this market looks absolutely horrible, just terrible, nowhere left to run besides real estate investment trusts and utility stocks and some energy stocks. But yet somehow the Dow Jones Industrial Average is above the 50-day moving average. Same with the S&P 500. It's absolutely comical to me. It tells me that either that these defensive stocks are that much stronger than everything, or it's going to be a very painful catch-up ride for the big cap indexes, and that's going to probably start making the nightly news. However, as it is, all I heard today from my friends was that CNBC was talking about buying the dip. Traders were talking about the value that's in these momentum names that have pulled back. And my only theory is that following Friday's destruction and all these momentum names, if they were so quote quote cheap, why didn't we see any support in these stocks at all today? Instead, I continue to see further sell-offs in momentum stocks, and it doesn't look like that wants to stop anytime soon, as there was no huge volume indicating area of reversal. So before anybody thinks that stocks are quote quote cheap following this brisk sell-off that we've had, I would go ahead and rethink that whole strategy, because I'm telling you, following the breakdown below the 100-day moving average, which the NASDAQ has been able to hold above, which I don't have here. Let me add this indicator really quick. You would definitely have seen, some kind of support today, because you can see we've had it, broke through it on Friday, and a confirmation follow through. So it's just getting ugly out there. And further to add to that case, the semiconductor stocks followed through on their Friday sell-off, so they're starting to crack on huge volume. And on top of that, the BKX, the bank index, I'm going to go ahead and look at FAS, continue to crack today. And with that, is going to go to my next point. Goldman Sachs, excuse me, let me go ahead and fix this. I want to get rid of that exponential moving average, or that 100-day moving average, pardon me. Goldman Sachs has broken through the 50 and 200-day moving average on not very heavy volume, but heavy volume. Bank of America is cracking the 50-day moving average on heavy volume. Looks like it's rolling over. JP Morgan is starting to sell off, but it really hasn't picked up steam yet. Wells Fargo is trying to reverse off the highs on heavy volume. If the bank stocks continue to sell off, they have a long way to go to any kind of reasonable support area around the 200-day moving average or further support lows. So it could get ugly out there, but what I would like to see here is the market go ahead and move sideways for a little bit, consolidate, then crack wide open, because if we continue to sell off, we're just going to be down too much in too short of a time, which then brings us the possibility to short the next bounce. Still, though, with the bank stocks breaking down, I want to go ahead and start a small position in the financial bear short sector, 3 times leveraged ETF position. So I'm going to be using FAZ, going to be going long 5% of that in both accounts. And if it closes above the 50-day moving average, we might add more. However, after this, I might want to go ahead and go after the semiconductor stocks, because they're showing poor relative strength right now on the selling, and if the selling does pick up, they will play catch up just like the bank stocks will. So then I'll want to rotate in semiconductors. Notice I've rotated into the Russell 2000 short first, then the Nasdaq short, then the S&P 500 short. Now we're going to the bank stock short, which would then probably be followed by the semiconductor short. So it's really starting to line up and not look good out there. And I mean, some more stocks breaking down. You got TA, Baidu breaking down. So you got Hawaiian Electric, you got NASDAQ breaking down. It's just all over. BITA breaking down on heavy volume. So, we got full sells in POWR today with our weakest stock in the group. ARC is rolling over, so that's a full sell. Partial sells in XEC, 50%. Not moving up immediately. AER and VIPS. VIPS is looking to be a full sell very soon, but we only have about 20 longs out there, and about 10 of them have been recent longs, so we're only holding about 10 positions that have held up since our early purchases in 2012 and 13. So the market continues to look very weak here, and I just don't see any sign whatsoever of any kind of support. So the first level of support that we're looking at obviously is the 200-day moving average, We'll see what the market does here, but with the 50-day moving average rolling over, that's going to be another line of resistance. So don't get too bullish just yet. It looks like that we're not even close to selling. We're still very expensive overall on the price earnings and price to book value ratios on the market. And the bottom line is no support following Friday's big crack is a big tell, because if all the other times that we've had a big crack, we've always gotten support. Just look at this NASDAQ chart right up here. You can see when we get big crack, we get some kind of reversal and support. We did not get that today, but maybe we'll get it tomorrow. I don't know. Can't predict the future. I just know what the current trend looks like, and it doesn't look good. And the potential for even uglier selling is very huge, especially looking at the Dow Jones and S&P 500 and where it has the potential to go to.